Alrighty, greetings out there. The question has come up to explain a little bit more about the income tax effect when adding back interest to net income. So that's what this is going to be titled, the income tax effect. And the people who know grammar well will tell me whether or not that should be with a or not. At any rate, that's what I'm calling it, the income tax effect. And let's see what it's all about. So in class, what we did is we saw problems where we were told the net income is a certain number, let's say $100,000, and they told us that included in that number was interest expense of $1,000. And what we did to adjust this interest expense deduction, why were we adjusting it? Because we needed to get to NOPAT. NOPAT is net operating profit after taxes, but before interest expense. So we needed to add back the interest expense, and this was the amount of the interest we were told. And what we did is we simply said, okay, take 1 minus the tax rate. Let's say the tax rate is 30%. So 1 minus that gives us 0.7. So we multiply 0.7 times 1,000. You get 700. And so then you add that back here, and you wind up with the adjusted 100,700 as the net income after taxes but before interest expense. So that's assuming that this is the number of net income after taxes and after interest expense. So the add back becomes not the full 1,000 but net of the tax effect, which is 700. The other way I had looked at it in class is I said, well, if the interest expense is $1,000 and the tax rate is 30%, so the tax would have been 300. So and the deduction was 1,000. So it means that we saved 300 in taxes, but the deduction was 1,000. So the add back should be the net $700. That's the other way to calculate it. I'm going to give you an illustration of why this works right now. So let's take a look. Let's do the problem the following way. Let's set it up and say we've got income of 200K. We'll look at it two different ways. We've got expenses, 99K, 99K. We've got interest expense of 1K. Gives us net income before taxes. So it would be net income before tax. And the tax will be 30 because it's 30% rate. We're told that 30% rate. And that brings us to 70K of net operating profit before taxes, but after interest expense. And what we want is we want a pure NOPAT. We want just this. So we want to get to the net operating profit before taxes, but not after the interest expense is deducted. So to do that, if we had enough information, we could do what's in column B here, which is we could ignore interest expense deduction and figure out that our net income before taxes, but before interest expense, instead of being 100 is 101. That's the contrast. The tax effect is that now instead of 30K, it's 30.3K. Do the math. Do 30% tax on this number, and you're going to get 30,000K, 300. And that means that the net income down here, which will now be our NOPAT, that number is going to be, let's do the math, and you shall see, 70,700. So notice that in the contrast between taking what was the official net income after interest expenses deducted, which happened to be $1,000, and what we wanted to do is to translate this into NOPAT, net operating profit before taxes, but before interest deduction, the add back is not the $1,000. It's the $1,000 net of the tax effect. The tax effect is $300 at a 30% rate. So we're going to add back the difference between the $1,000 and the $300, or $700. That's why the calculation works, and that's really what you're doing when you do the calculation. Because when the problem is giving you is starting here, the problem is giving you something that starts here, where interest expense has already been deducted, and the effect of the tax deduction has already been calculated. So that's really why you have to do what you're doing. If they had given you this number right, let's say right here to start, then the add back would be simple, $1,000. And then you do, because you'd be over here. Well, I've no use going in any further with the detail. I think I would just confuse you. Hopefully you got the picture. If you don't, send me an email and we'll see if we can't straighten it out even further. But that's basically what you're doing back here when you do this calculation of the tax rate using the formula 1 minus the tax rate to get to your multiplier, so you know how much to add back. All right. It's not even that. I was starting to get confused, so I think that's why I'm stopping. All right, but hopefully you're unconfused and you can teach it to me.